morning, everybody. Good morning. Good morning. Good morning. It is 6:23 a.m. Wednesday, July 26th. It's FOMC Day, so I'm not going to waste your time because the FOMC meeting is what it is. You have absolutely nothing to do until the FOMC meeting. Trust me. You have resources that you want to deploy on other places, or some of those further out ideas that we've already shared. Absolutely. For your day trading, for your one day to expiration, for your Friday trades, you have nothing to do until the FOMC meeting. Yesterday, fucking abysmal. Failed again to get a 30-point range. Got 3 green closes in a row, getting our warning sign. We did put a new high, 45.80.62, and then we did come back to that resistance area to close. So it was a little bit of a sweat there over on the spreads. July, 195 points. You got your October, your March bottom fractionally higher now because you're 2 points higher than you were last week. And again, from the email I sent out on Monday, it is a very, very reasonable and probable scenario. So it needs to be respected, and we will find out a lot more as we go into the FOMC meeting. So I'm going to go quickly into the chart room because I'm always happy when I save somebody. And yesterday I saved 2 people, very long-time members, from drowning in a 6-inch pond while they were paddleboarding. When they wanted to buy calls on Spotify because of the gap down. Yes, you are alive today because I saved you, and it was a lot easier to slam your dick in the door 3 times than to go and waste money buying calls on Spotify. On DIA, this is now 12 days in a row. 12 green trading sessions on the Dow Jones. I shared the data. I can't change the data. We're going back to 1929 now as to the last time this happened. So it's data. That's all that it is. I shared my ideas. I shared my comments. We're already starting to get a move down on the Dow Jones. Chart porn.
You got the touch. You got the power.
If that doesn't make, unless you're seriously transgender and saying that you no longer have a dick, if that doesn't make your dick hard, you need to stop trading. This is a fake print, took place at 8 o'clock last night on the QQQ. 355.92. I've already discussed this with everybody. This is why those further dated out August 25 QQQs were sent out as an alert a week ago, and very, very, very much at $7.40 on the close yesterday, alive. Google, the big gap up after saying AI a larger portion than Microsoft of 145 times on the conference call yesterday. Blah, 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 blue, 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 blee, blee, blee. Gap to fill is at 122.21, coming up to a gap that is unfilled from back in April of 2022. And yes, there are a couple of gaps up above on Google. See if they show up here. Yeah, they show up here. You're looking up here, up around 141 to fill all of the gaps that they've got going all the way back to March of last year. Are they going to fill it? No. Are you going to short it? QQQ. They are inside QQQ. So all you have to do is trade QQQ. Apologize for this because I am waking up as you guys are. What the hell is wrong with you, dude? Come on. Get this back. Okay, done. Enough of this. Microsoft. Yeah, it's AI, but what we're going to do, yeah, here we go. The AI revision as it's not working this time. And as I shared you on that chart, this is at bull trap line 343.90. You can see very clearly how you were supporting it going into Friday and Monday, and then now you've collapsed it. So this is your Microsoft. That's what you're looking at. And if you want to take a zoom out, this is their, oh, we're going to raise prices and AI is going to be the hottest thing in the world. Yeah, well, your 30-day lows are 325. This goes all the way back to the middle of June, where that middle of June was only a portion of it, because this is your middle of June right here, or your early part of June. Here's where AI was invented. And you're not going to get that because that's 293.42 is 20% from the all-time highs. Nobody goes 20% from their all-time highs when they put a new all-time high in. 330 is your base. 330, 330, 330. 330 is your base. So don't go fuck yourself up. And come on back into where we are with the SPX. So quickly, and again, I know it's morning and I know I'm using adult vocabulary, which I apologize for. We have a gap from the early part of the week, which is unfilled. We still have very large portions up above, like I have shared, which are plausible and possible. Today, 46.05, downside 45.30. That's what we're looking at. In fact, this needs to be changed, and I'll do it right here. 4580.62. That was the high yesterday. Bang, bang. So that is enough. 45.35 is minus 1% from your new year-to-date highs. For today, 46.05, 45.35 is our window. No, it is not something that you go out there and start trading just because the market gets open today. We are now 14 days without a minus 1% decline. 14 days since no minus 1% decline. Yesterday's 45.80, 45.75, everybody made money on it. However, late in the day, as I shared there in the chat room, there was that window where you could get a little bit better than 250 credit, and yeah, it did work out quite well. So, start you here with the QQQ. Again, QQQ plus 1% day yesterday. Like we shared, it was extremely oversold. Had a buy divergence. That's all you got was that move up to 381. Those that were in the calls for the end of the week, obviously the 50% that you got on it was good enough. And you had more than enough warnings to get out of it. So here we go. FOMC. I've shared this many, many times as I create an FOMC email. I don't know if I'm going to take the time to do it today, but we'll see. It's still only 6:30 in the morning. We had 4 back-to-back closes going into the June 14th FOMC meeting. And bring you back to where you were in June. Your FOMC meeting took place on June 14th. You already had 4. 1, 2, 3, 4. That was our big, major, humongous warning sign because we've never had greater than 4 green closes in a row going all the way back to October, November of 2021. Well, they went ahead and they closed it green that day on June 14th. And then we got the other green close the next day on Thursday, which is how we had that massive short on June 16th after having posted the highs of the month there on June 16th. Bring it back over to where we are and June 16th as we come there. Bang, bang, bang. 44.48 quad OPEX. And we had the 100% trade over there on the spreads for the downside. So, again, FOMC meeting, having had May. As you can see here in the chart that is shared, you do nothing until the meeting. When the meeting comes, you will be able to play both sides. You will be able to play calls. You will be able to play puts. You will need to flip them. Puts pay every single FOMC meeting. Period. The end. You have your range, which I've shared in the email already, and I'll be sharing today. Forget about the gaps. They don't matter. Forget about all of this. I'm going to scroll down, and here we go. May 3 was only 59 points. June, bring it back. June 14th was only 54 points. May was only 59, and this is the one that really screwed us up because we thought we were going to be able to get lower, and we only got down to 40.90 on that day. We thought that we were going to be able to get that move down to 40.70, 40.55, if I recall from my memory. March 22 this year, 103 points, our last ever 103-point trading session. As you see, going nowhere, spike, plummet. February 1, 100 points, 111.75. As you see, going nowhere. This is, again, the day before we put in our February high, which was on February 2, which was our full moon. Right there, going nowhere, going nowhere. We come out, the FOMC meeting, and just spike, run to the upside. February 2, that's why I'm showing it here. That's where your top is. And again, you come into all of these other declines. Here's January, flat, nowhere, FOMC meeting, drop. Flat, nowhere, FOMC meeting, we dropped into it, and then Powell said something back in March of 2022, and we spiked and ran up, and we went into our March highs, 46.37. May 4th, same thing, flat, 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 spike. It's going back too far with the history that we've got here. Here's September, where everything was shit. November, everything is shit. December, everything is shit. So what you're looking at from last FOMC meeting, again, here is June 14th. You go nowhere, you go nowhere, you go nowhere. Then your meeting result comes out at 2 o'clock. Then you have the press conference at 2:30. When Powell starts to speak is when your move makes a commitment. And as you guys will remember when we went into the last FOMC meeting, for those of you that were here, you know what? We'll leave that there as it is because we're going to use that. VIX, 30 days. This dot right at 1451, this was the FOMC meeting. And as you guys would remember that were trading that day with us, we were not seeing any kind of conviction on the VIX. And that was how we had the initial hint that the puts were not going to drop off despite the, whatever you want to call it, pause. And we started to progress higher. You've got these gaps, very obviously, that are up above from well long ago. You've got that gap from last week, and we still have the gap from over the weekend. So the VIX is going to help us. The VIX is going to help us quite a bit. The VIX is going to help us there because, again, when we are trading from 2 o'clock until 4 o'clock, it is a 2-hour window, and this is one of the most helpful indicators for me in order to be able to get that 300, 400, 500, 800, 900, 1,500, 2,000% trade on the SPX. I will see you guys in the chat room. Don't fucking push buttons until we get to the FOMC meeting if you are trading short term. Enjoy your coffee.
And I think the first part of this issue that should be articulated is AI is kind of a fancy thing. It's, first of all, it's 2 letters. It means artificial intelligence. But ultimately what it is it's about machine learning. And so the machine is taught. And part of the issue here is what information is going into the machine that will then determine, and we can predict then, if we think about what information is going in, what then will be produced in terms of decisions and opinions that may be made through that process.